Hi everyone, welcome back to our Tomahawk Investor channel. Today we're diving into an intriguing topic. Why do wealthy individuals prefer investing in life insurance? Whether you're considering life insurance or just curious, stick around to learn about its benefits and some potential drawbacks. First, let's break down what life insurance is. It's a contract between you and an insurance company. You pay premiums, and in return, the company promises to pay a lump sum to your beneficiaries upon your passing. Simple, right? But why do wealthy people who seemingly have it all opt for life insurance? Let's explore some reasons. Firstly, life insurance is an excellent tool for wealth preservation. High net worth individuals use it to protect their assets from taxes and ensure their wealth is transferred smoothly to the next generation. Secondly, life insurance comes with significant tax benefits. The death benefit is generally tax-free, and some policies allow for tax-deferred growth of cash value. This means your money can grow without being taxed until you withdraw it. Another reason is estate planning. Life insurance can cover taxes, ensuring heirs receive the full value of the estate without having to liquidate assets to pay those taxes. Many life insurance policies have a cash value component that can be borrowed against or withdrawn. This provides liquidity, giving wealthy individuals access to funds when needed. Now, let's highlight some of the broader benefits of life insurance. Life insurance provides financial security for your loved ones. It ensures that they are taken care of, even in your absence. There's also the peace of mind that comes with knowing your family's future is secure. This can be invaluable. Unlike other investments, the cash value in a life insurance policy is not directly tied to market performance. This means it can offer protection against market volatility, ensuring that you have a secure portion of your wealth growing steadily. Many life insurance policies allow you to borrow against the cash value. This can be a convenient source of funds in times of need, often at lower interest rates compared to traditional loans. Having on mind all those benefits mentioned above, it is not strange that rich folks prefer life insurance. As an investment vehicle, life insurance companies usually invest conservatively, meaning invest in safe instruments like government bonds, banking deposits, gold, and cash. Investment funds, for example, that usually offer lower annual yields, in average between 1.2–2.5% per annum, yet on the other hand offer protection of investment. Rich people have already accumulated enough cash and are happy to invest with lower yields, just to have a peace of mind by having a stability for their funds and heirs. When on top of that, you add all those tax deductions and benefits, life insurance offers all it's clear. But should you invest in life insurance? Should you go all in and invest all your money? And is life insurance an attractive option, not just for the wealthy, but for everyone? Many people think life insurance is only for the wealthy. In reality, it can be beneficial for people at all income levels, providing crucial financial support and peace of mind. Some believe that life insurance is unnecessary for young people. However, locking in a policy when you're young and healthy can secure lower premiums and provide protection for your growing family and future financial needs. If you are a beginner investor or someone who is struggling how to create personal wealth, life insurance should not be the core interest of your investment cycle since yields are very modest. When you look at them on a longer time frame of some 15 to 20 years, for example. Especially for those young beginner investors, I would not advise whole life insurance products and life insurance policies that are a combination between life insurance and investment structures. Those young people should aim to invest in investment products that produce at least 10% yield per annum in order to cover for the costs of inflation and taxes and accelerate wealth creation. It is best to get a life insurance through term life insurance where you pay for insurance through certain period of years, let's say 10, 15, or 20 years, and you do not bother to add such insurance with cash investing component that will tie you to invest till the end of your life, when sometimes it can last till you are 100 years old, for example. Here at Tomahawk Investor Channel, we like to promote for one to learn on its own, How to create wealth by using the power of your own Tomahawk brain smartness and to use it for reaching financial independence and long-term wealth creation. Such whole life insurance policies in the starting 2 to 3 years create 0% yield for the investor, since in those first stages, investors pay mostly for fees and brokerage commissions. What you should have in those young years is to have a couple of life insurance policies in order to protect your spouse or children in case of your premature death. However, you should aim that in your midlife or older ages around 50, 60 years of age, you already accumulated substantial wealth that should protect your siblings in case of your death, even if you don't have whole life insurance or any life insurance for that matter. If you leave them around $1 to $2 million. By the age of 50, for example, it's irrelevant whether you have whole life insurance, because life insurance is all about protecting from unwanted death fatality. Usually, 20 years of life insurance means that you are investing $1,000 in each of those 20 years, meaning $20,000 for 20 years. And at the end of that 20 years, your insured amount will probably be no more than $22,000 or $25,000. It's really not that much. But if you see thoroughly through the product and understand that through 240 months your heir is insured for entire $25,000 and that from the first month you pay only $80 and you are insured for $25,000 for the entire period, and that in your second or third month you only paid $160 or $240 in total so far, yet your heirs are all the time life insured in case of your death for the entire $25,000. It's really something. Or imagine you have $20,000 today and invest in first month out of 240 months, only $80 in form of life insurance, and for the rest of $19.92000 you give to your broker and invest into first-class shares or other equity products. You can imagine that in about 8 to 9 years, you will double or triple your investment in shares. But what will happen if, God forbid, you die prematurely and do not live long enough to witness this achievement? In such case, your heirs will receive only the proceedings of your investments that were invested only for a couple of months or couple of years. On the other hand, your siblings will receive the entire life insurance policy, insured amount. Isn't it reasonable that for only $80 per month you protect your loved ones and invest a small monthly insurance installment to protect them against your death? And to shortly end this example, when the time comes for you to pay your second year annual insurance premium of $1,000, you simply sell a small portion of your shares portfolio. The similar will happen in the third year, the fourth year, and so on, when you will sell only a small portion of your shares portfolio to cover on time your insurance premiums for that year, yet continue to keep the rest of your shares portfolio, which should grow exponentially if you invested correctly. But it's not all sunshine and rainbows with life insurance. There are some potential drawbacks to be aware of when investing in life insurance. First, life insurance can be expensive, especially for older individuals or those with health issues. Premiums can add up over time. Some life insurance policies are complex and can be difficult to understand without professional help. It's essential to fully grasp the terms before committing. Prematurely breaking a policy can be costly. If you surrender a policy early, you might face penalties and lose a significant portion of your investment. This is the biggest drawback very few understand when they open life insurance policy. You should be aware that life insurance companies, in order to be able to guarantee from the start the entire life insurance amount, when they insure your life from day one, they count that you will be able to pay your all installments for the entire insured period. If you commit to be insured for 15 or 20 years, then you should pay all your 20 annual premiums each year, on time amounting $1,000, for example, or all your 240 monthly installments in case you have monthly premium payment dynamic. Very often it happens that someone is paying 13 out of 20 years, and they have paid $13,000 in that period so far. and they usually trust that their life insurance policy value has increased to the level of $16,000 or $17,000, yet when they request premature breaking of the policy, they will receive only 50 or 60% of their $13,000 invested. You have to understand that in life insurance, if you have invested so far for those 13 years, the amount of $13,000, for example, and you ask for premature breaking of the policy, you will only receive half of the money, in this case around $7,000. It is essential to understand that you should have clear understanding what your cash flow and liquidity will be in the next 15 or 20 years, and to ensure yourself to a specific amount which is reasonable to be able to be paid from your side on the regular basis for the entire life insurance policy lifespan. Otherwise, if you insure yourself on larger amounts, but you are not able to pay your monthly installments, you can easily lose half of your investments when the time comes that you will need cash and request premature breaking. In conclusion, life insurance offers numerous benefits, especially for wealthy individuals looking to preserve their assets and provide for their loved ones. However, it's crucial to be aware of the costs and complexities involved. If you're considering life insurance, take your time to understand the options and choose wisely. We hope you found this video helpful in understanding why life insurance is a popular investment choice for wealthy individuals. If you have any questions or want to share your experiences, leave a comment below. We're always eager to hear from our community. Thank you for watching, and remember, proper financial planning today can secure a brighter future for you and your loved ones tomorrow. This video is for informational purposes only and does not constitute financial advice. Always consult with a licensed financial advisor before making any investment decisions. Like, share, subscribe, and hit the bell icon. See you in the next video, and until then, stay informed and take control of your financial future.